M&M Finance reported very strong set of earnings with its profit jumping by 15% and its AUMs crossing 75,000 crores. That's an uptick of 16% at a standalone level. So Mr. Ramesh Iyer of M&M Finance is here to talk to us about the earnings. Sir, this quarter was very strong for you with disbursements going up 31% on a sequential basis. So is that a seasonal factor, festival season impact, or do we expect this kind of momentum to continue?
I think there are two or three things that one needs to look at. One, of course, definitely it's at the back of the festival season, but also that the dealers were in an aggressive posture, offering various discounts as supported by the OEM in order to reduce their inventory and reach a level which is comfortable for them to be able to handle the coming in of the BS6 by end of the next quarter. So that's the other. And third is we ourselves have become a little more aggressive when it comes to the pre-owned vehicle segment, which has shown a lot of demand traction in the rural market, including the tractor pre-owned. So that's been one of our growth story very clearly. And we have always maintained that our deeper penetration and direct engagement with consumer is able to help us generate a lot of volumes on our own, which in a way helps us gain market share vis-a-vis the competition. Put the four together has been the reasons why we have been able to maintain a little growth over the industry's overall behavior, of the auto industry's overall behavior, where they have shown a declining trend.
Okay, so you did see a lot of momentum in the used vehicle portfolio. What about the new vehicles? Do we expect demand to pick up from here on, and what are the kind of efforts that you are undertaking in that particular segment?
I think our own belief is, with the extended monsoon, this quarter did have little pressure. But with the water levels being good, we definitely do see the next crop season turning out to be very, very positive. We also expect that at different state levels, the infrastructure story will open up quarter-on-quarter basis. The two together should trigger a lot of demand, and then BS6 comes in and the acceptance of the product starts to happen. By the beginning of the next festival season, surely we will see a very, very aggressive posture when it comes to overall demand from rural market. I think the cash flows have been good, but the sentiments have not been very supportive. And that's a reason where we saw some slowness around, and the new vehicles should pick up. But so far as heavy commercial vehicles are concerned, I think it could take little longer than what a car segment or a UV segment or a tractor could take. And therefore, the commercial vehicle could take a little longer than these products.
Okay, so one of the key highlights in your earnings was the uptick in the margins, primarily led by lower cost of funds. So what is the likely trajectory that we can see going ahead as far as margins are concerned?
We still have in our books a lot of past liability, and as and how they mature and we replace them with the new borrowing, clearly one would see the reducing borrowing cost helps the margin improvement. And our own view is that in the next couple of quarters, we don't see the borrowing cost going up with the current liquidity situation being what it is. And therefore, one can definitely look forward to an improving margins supported by reducing borrowing cost.
Mr. Iyer, I have to ask you just one last question. We are just 2 days away from the budget. What are the expectations that you have?
See, I think the industry has been for long requesting for looking at setting up a refinancing window for NBFCs, which would bring a little more stability to the borrowing programs for NBFC, which would be a great liquidity support. We would definitely also look for a very overall positive trend in the budget, therefore guiding the sentiments to turn positive and things to start changing from then on. The last thing would clearly be to give little more acceptance to the current environment of the rural market, and therefore the retail NPA pressures are expected to continue to remain, and therefore the support from the various support bodies, whether it's the rating agency, regulating bodies, etc., to definitely recognize that fact of the pressure that we witness from the rural market, which is likely to improve, should also be somewhere factored in the budget. But overall, I think we would expect a very, very positive outlook in the budget, changing the sentiments to be positive overall.
Mr. Iyer, thank you so much for joining us. It was a great pleasure speaking with you.
Thank you.